You're listening to Level Up with Melissa Zeloof from IronSource.
Welcome back, everyone. I'm Melissa Zeloof, and you're listening to Level Up, the podcast for people who love making, growing, and of course, playing games. Joining me on today's episode are Spike Laurie, Venture Director at Hiro Capital, and Mario Liu, who's VP at Barclays and Lead Analyst for video game stocks. We are going to be talking about the gaming industry, unsurprisingly, talking a little bit about Gametech, because this is our Gametech dedicated mini-series, and the game investment landscape in general. So thank you both for being on the show today.
Thank you very much for having us.
Likewise,
So,
thanks for having us.
Spike, maybe let's start with you. Tell us a little bit about yourself and your journey in the gaming industry. How did you end up at Hiro Capital, and what do you focus on there?
Sure. Well, I've been in the games industry now for roughly 10 years. I started at Warner Brothers Interactive Entertainment, marketing traditional kind of games, Mortal Kombat, Batman Arkham Knight, Shadow of Mordor. My journey with those games brought me sort of esports. I've been playing competitive video games since I was very young, but really it allowed me to sort of test out the business of competitive games or esports. I joined ESL, Turtle Entertainment, a few years back now, and helped build their UK business, helped build their Latin American business, and most recently was in Los Angeles, helping manage their sort of global revenue pipeline for game publishers. Mm-hmm. It was sort of through that and the experience in esports, Ian Livingston last year was creating a new venture capital fund headquartered in London, focused on game studios, esports and digital sports. And so I took the opportunity to join the team as we sort of set up the fund. And it's been a pretty great journey so far.
And how does it feel to sort of be on the investment side of things?
It's great. It's really good, actually. We get to see a lot of great businesses. I think we totaled it up that we've seen almost 1,500 businesses this year. So Wow. There's this great landscape in games, especially, of creativity and entrepreneurship, which is really refreshing. And so to be able to look at and help those businesses on that journey and to provide experience, the limited experience I have, but the wealth of experience that someone like Ian has, to be able to provide that expertise and open our network to them and to help them grow and flourish we're very, very lucky to be able to do that.
And have you found that there's been like a spike? I did not plan that. It really, only as it was coming out my mouth. Have you found that there's been a spike in sort of pitches following COVID? And I mean, we saw a big increase in time spent in games, and it wasn't just us that saw that. Did you see kind of a corresponding rise in the number of people trying to build game businesses?
It's actually been quite difficult, I think. Or it's for game studios because since March now, the investment landscape has changed slightly. The games industry especially in the UK, is built on angel and seed funding because, we have this incredible wealth of businesses. We over-index in talent and the game studios in the UK and in Europe. And so we've got these people that have done extremely well from the games industry, paying it back and doing a lot of angel and seed funding for studios. But I think with coronavirus, what happened there is, everybody saw the stocks go down, this idea of this recession coming and that we were in recession. I think a lot of those investors sort of just took stock a little bit and went, wow, okay, hang on a second, this is real. And institutional investors sort of just took a little bit of a, let's see how things play out. I think now, though, everyone's seen how fantastically well games are doing, both in the public markets, private markets. I know that we're going to get on and talk to some of that cool stuff. But I think now you're seeing a lot of institutional investors getting back in and saying, right, we've got to be in games. Things that we thought were foolproof 6 months ago, like property, now looks really uncertain. And what does look certain is this idea of games, the metaverse, this sort of digitization, avatarization of society. And so now I think that that has everything's picked back up. And a lot of people, I think, in the industry, and rightly so, have thought, wow, actually, COVID has shown the strength of digital, the strength of this connected kind of metaverse society that we're moving towards. And therefore, that idea that I had for X, Y, or Z, I'm going to get out there. I'm going to find an investor.
Right. And Mario, super interesting job. How did you end up at it, becoming a lead gaming analyst at Barclays? And what does your day-to-day look like?
Yeah, I think it's pretty funny. Me and Spike have pretty auspicious names, being in the video game industry.
We
So
do.
yeah, for me personally, I always grew up playing video games with my cousins, and having gone to school and studied finance, I naturally gravitated towards covering the space that interested me most. So I started off my career in consulting, and then I jumped to the investment side before landing at Barclays within its equity research department. So at Barclays, I've been there for a little over 5 years now, and I cover a number of video game stocks, such as Activision, EA, Take-Two, Zynga, and Unity. So what that means is I research the companies and how well they perform, and expect to perform operationally, compared to where the stock is trading at today. So using those two barometers, I determine whether to give a buy, neutral, or sell rating to each stock.
Hmm.
So, long story short, my day to day includes a lot of calls with investors, people like Spike, the companies themselves that I cover, either public or private, and a lot of Excel modeling to kind of come up with all the analysis.
And I mean, we are going to touch on this, but have you found that, have you noticed a shift in the way the kind of financial community looks at the video game industry over the time you've been at Barclays?
Definitely, I would say over the last 5 years, there's been a transition from more traditional media investors being interested in investing in video game stocks. That happened 2 to 3 years ago, and then more recently, a lot of software investors have actually been interested in video game stocks, especially as these companies has come up with more subscription models,
Hmm.
so more repeat recurring revenue streams. So you see a lot of other investors outside of traditional internet, traditional video games that are interested in the space. And so my uptick of calls this year, especially with the new console cycle coming, that has definitely driven the volume up as well. But certainly all this shift from traditional media and software has increased the interest in video games.
Hmm. And both of you actually have a quite a wide perspective on the entertainment industry. Spike, you came from Warner Brothers, and Mario, you're analyzing the space. So I'm curious to what your take is on gaming inside entertainment or inside that context, and what advantages you think gaming has over other entertainment mediums. Because from a revenue perspective, and I think this is, it's an old stat. Not, I mean, it's sort of been around for, let's say, the last couple of years. It keeps getting bigger, but this idea that gaming is worth significantly more than the music and film industries is, I think, quite shocking to people. And yet the numbers really sort of stack up here. Why do you think it is that gaming does so much better than other forms of what feel to be more mainstream entertainment? Oh, I have to tell you who takes it first. Spike.
Sure, happy to. Well, first of all, it's interactive, and I appreciate a lot of people are surprised at the size of the games industry. I think there are actually a lot of people who aren't very surprised. Having grown up playing games my whole life, the number of hours that I have played in video games completely, transcends the number of hours that I've spent watching sort of static content. There's this great old saying that the medium is the message, and
Hmm.
what I think games have allowed a new message to be told because the medium is so different and so malleable and so interactive. And actually, some of my most prolific experiences and some of my most memorable experiences of storytelling and content comes from video games. I think of Avengers. I'm a big Avengers fan, I'm sorry to say. But the Avengers Endgame and all the Marvel content, I really love that. But I hold it at the same level of storytelling or the same level of passion as I do for something like Final Fantasy VII, or Deus Ex, or System Shock, or Ultima Online. And I think that's what's really cool about video games. It allows you to tell a very deep, very immersive story and put you at the center of it and have you interact with the characters. And that is, I think, what's so unique and so compelling at a human level versus sort of cinema.
Mario?
Yeah, so in addition to video games, some companies I cover include Amazon, Netflix. So, a lot of similarities in both of these verticals, including the shift to higher margin digital businesses, and also both of these verticals going more direct to consumer. So they're both big positive trends. I would say for gaming in particular, it does have its unique advantage that Spike talked about, that by nature it's interactive compared to the others, which are more linear. So on the financial side of the business, video games have benefited immensely from in-game revenue. So this started out from expansion packs to add-ons, which are add-ons to the first unit launch sales, but that has evolved over time to include loot boxes, virtual currency, to now battle pass, all of which provide unlimited spending potential. So in other words, a player that is playing FIFA 21 can spend $10,000 on Ultimate Team versus linear entertainment where you rent a movie or buy an album, which are one-time purchases. So to me, the unlimited upside provided, by video games is a significant advantage over these other entertainment mediums.
Yeah, I think that's definitely something I had in mind when asking the question, because it doesn't really make a difference to Netflix. No, it doesn't make a difference to the consumer if Netflix is offering you 100, 1,000, or 100,000 shows and TV or movies and TV shows. You're still paying whatever it is that you're paying a month. Whereas in a game, theoretically, I mean, it's not obviously not endless, but it's very difficult to sort of put a limit on how much revenue you can potentially generate from a user. Um, and Mario, another question for you. There's been a trend of seeing well, it's not even non-traditional gaming companies. It's the traditional sort of tech behemoths, like the FANG companies, getting involved in the gaming industry, whether that's through sort of cloud stuff or creating their own games or their own game platforms. What springs to mind is Amazon's recent attempt to sort of become a player and flopping with Crucible. Google also struggled with Stadia. Why do you think that is? And what do you think is critical for sort of success in the game industry? And I'm putting a lot of questions on top here, but do you think it's actually paradoxically harder for a big company that isn't gaming in essence to succeed in the industry?
Yeah, it's a good question. I don't think it's harder for a larger company to, excel in gaming. I think, as the saying goes, content is king. And, currently neither Amazon or Google have quality gaming content on their platform currently. So I think Amazon arguably, has the best gaming content out of the large tech companies since they own Twitch. So they thereby own game streaming content. So I'm pretty excited to see how they eventually tie in their cloud gaming service called Luna with Twitch. I think over the past few months, you've seen an acceleration of gaming as a channel for social connection. So you've seen games like Among Us or Fall Guys that are kind of more casual, more simpler games, kind of jump to the top of the charts. So I think having the ability to connect a social channel like Twitch with its own gaming platform like Luna will be very interesting. So I think where these large companies went wrong, especially for Stadia, is that the marketing aspect was, it didn't really tie with, consumer demand. So they came out with a pro edition at $10 a month with just access to its cloud platform. So basically over 30 months of using that platform, it would cost more than buying a console itself, which, economically doesn't really make much sense. So I think for Amazon's Luna, they said it's going to be $6 a month, which is kind of like that Netflix model, which also includes a number of catalog titles. So I think both of them kind of missed, the boat in terms of an attractive business model for consumers. I think Google definitely could have marketed Stadia better, especially because they have this free tier that no one really knows about. So it's basically there's cloud gaming at 1080p for free, which I currently use. So you basically just buy games a la carte and you can play for free on Stadia at 1080p. So it's similar to having any other console, but they just didn't really market it and not many people know about it. So I personally tried both Stadia and xCloud. I think the technology is great. It needs the right business model, but then also the right marketing for it to work.
Mm-hmm. And have we sort of, when I say we, I mean both me as Iron Source asking the question, and also sort of general industry knowledge, missed any sort of big plays from tech or non-tech companies who are trying to get into the space?
Well, I think following on from what Mario was just saying, I think the thing that I found most interesting recently was Microsoft's acquisition of ZeniMax. I think 7.5 billion. A lot of speculation at the time as to what was driving that, whether it was this sort of console war with Sony wanting to have exclusive content. But to Mario's point, content being king, the Bethesda, the ZeniMax world has been built on, over a decade now of really strong content, lore, world building. And I think just like Microsoft did originally with Minecraft, it's not just about making more Skyrim games. It's about what does the Skyrim TV show look like? What does the just like the Mandalorian did for Star Wars? What can Microsoft produce or create with that world that sort of engages consumers with that property? And I think that was particularly interesting, seeing that and seeing sort of the driver for that being this content. And allowing gamers to reach this, this world.
It's handy that you've mentioned acquisitions, because the space is definitely heating up from actually a multitude of different angles. And it's funny that actually I think since we booked this podcast, certainly the IPO space has heated up massively. So many different parts to this question. It's a very exciting time on the one hand because investment, interest, time spent, amount of people playing games, time spent playing games, everything's kind of up. On the other hand, you've got intense competition for user attention. You have sort of sweeping platform changes which could have a dramatic impact on the industry, like iOS 14 or Apple's changes to the IDFA on the horizon. Within that context, what are some of the trends you guys are seeing and expect to see in the industry? And Spike, you can maybe take this first.
Well, maybe I'll let Mario, because I kind of jumped the gun on my last answer, I guess.
True. So naughty.
Yeah, sure. So yeah, I agree that ecosystem has never been more competitive, particularly on mobile. But I would say on console and PC, where the large public publishers compete in, the larger franchises like Call of Duty or Grand Theft Auto, they're becoming bigger, and competition. They're basically building a more defensive moat around their franchises. So you can kind of see, what Activision has done with Call of Duty over the years. They introduced Call of Duty on mobile. They introduced Warzone, which is a free-to-play business model on PC and console. And so I think having that multi-platform approach and having that business model, whether it be free-to-play or buying a premium title, that kind of widens the funnel for the audience for each of their franchises. And I think that's a playbook that's going to be very successful going forward. I think overall there's just a lot of money floating around in the industry, as you can see with the Microsoft's acquisition of Bethesda. But I think there's also it's also going to drive a lot of non-traditional vehicles like SPACs that are becoming very popular recently. So one of these gaming companies, Skills just went public recently through a SPAC. I think there's probably a lot of opportunities there, I would say, in the next year or two, for more of these gaming companies to go public in a non-traditional way.
Yeah, I think as well there's a lot of impetus for these big businesses, these big companies to need to not reinvent but stay up to date with the current trends. And I think another interesting one was, Oracle and how they were sort of looking at the TikTok and how they were sort of approaching that. Oracle is a very fusty, if I may say, kind of business that no one, I think, would accuse them of being sort of on the knife's edge of things. And yet here they are now, with one of the hottest, youngest sort of platforms, technologies out there. How they got there is obviously kind of interesting, but I think we're going to see a lot more of these kind of big behemoth sort of businesses wanting to get into more exciting, funner spaces. And another great example of that is Facebook and Oculus, right? Really, really, really great. And, again, Facebook's main business model is about as boring as it gets for most people these days. And yet here they are, pushing the envelope with virtual reality.
And let's jump to talking about esports. I think there are some conflicting sentiments in the industry about whether esports is worth the enormous hype. My assumption is you're going to you're going to agree that it is. But what are some of the reservations that some people have in the investment world about esports, and are they justified?
Well, I mean, yes. Firstly, yes and no. The esports industry is hyped. I think we all know that the way that society is moving, we all know the way that everything is becoming more digital, and we're moving into these sort of digital worlds. So it makes sense that the sports of the future become digital. And so I think the macro thesis is right, that this is a growth area, and therefore because of that, the valuations or the investment case is a little hot. So I would certainly agree with you on that, but that's the cost of being at the table of a growth industry, right? The main problem that esports faces from an investment perspective, and this you can either think of this as a feature or a bug, right? This is either the black hole that the whole esports industry circles, or it's just a feature of the 21st century and the way that everything's going to work from now on. And that is that the owner of the intellectual property, a lot of these businesses that are out there seeking funding or running in esports do not own the underlying intellectual property of what they are building upon. And that is a big problem, because if you want to run an esports tournament for, let's say, Fortnite tomorrow, you need permission to do it in the first place. And secondly, you're at the behest of the game developer. The game developer might put a new weapon in the game tomorrow, or might change the map tomorrow, or might decide that they want to go from 100 players on a server to 80 players on a server. And you, as the tournament organizer or the league or the team or the brand that's involved or the platform that's serving that, have no control over that. And that is super important. And secondly, the IP owner may have their own vision for what they want to do, and some, like Valve, who I think are, there by the grace of Valve goes the esports industry. They're open license. They're allowing anyone to exploit it. They're allowing anyone to build a product around it. Has created the ESLs, the Blasts, the Facets of today. The flip side to that is no one can own it fully, because there's a lot of competition, because it's a wide open playing field. And on the other side, you've got the Activisions of the world who are saying we are going to do it our way. You may not use our game. You may not use our intellectual property. If you're a team in our league, you must play by our rules, and you must even rename yourself. So those are the two kind of positions in the esports market.
It's interesting actually to think of traditional sports and esports as being different in the sense that you don't if you're a football team, it's not like you're at the sort of is it
The
The
mercy.
mercy, thank you. You aren't at the mercy of someone else who sort of owns the IP of the game, which is a really critical difference, which actually I've never thought about. So moving on to Gametech, which is this sort of new thing that Newzoo, the research firm, has sort of coined with their infographic, which mapped out this ecosystem of companies that sort of creates tech that fuels or enables the game industry. I'm curious how you, from an investment perspective, how you guys look at the technology sector of the game industry, or game tech, as I'm calling it now. Is it as interesting? Is it critical? Is it part of how investors look at the game industry actually, or is it kind of a blind spot for them? Mario, maybe you can take this first.
Yeah, sure. I definitely think it does matter. I think I said before, content is the most important. But on the investment side, supporting the ecosystem is just as attractive as an investment vehicle. So one of the main drawbacks that prevent investors that I talk to commit capital to the gaming space is the hit-driven nature of the business. So I think investing in a game tech company, in a sense, it gives you the upside in of the positive gaming trends, but also gives you less volatility because they have less reliance on specific title releases. So as you can see with Unity, them being a game tech company in the development space, there's a lot of demand right now for these game tech companies. Unity, they IPO'd at $52. It almost doubled right after. So there's definitely high demand. There's not many companies that are public yet for investors to kind of invest in, but the demand's there. I think it's just the beginning, but it definitely does matter on the investment side.
And do you find that investors are cognizant of game tech opportunities?
Yes and no. I think it's hard because a lot of the public companies are kind of more focused on the console and PC side. So, the game tech side of those platforms is a little bit more limited because, like, say, in Activision, they mainly use like their in-house game tech, whereas for mobile gaming companies, they use a host of third-party game tech companies' services. So I think when you see more and more mobile companies go public, I think that's when you see investors being more familiar with the space. It's definitely still early days, so I think investors like Spike who invest in like these private companies, they probably have more of a sense, of where this trend is going. But I would say on the public side, it's still early and fairly new to them.
Uh-huh. And Spike?
Yeah, I think that's fair. I think we're seeing a lot of different game tech businesses out there who are each solving quite specific problems. I think therefore you really need to be honest about your monetization opportunities when you're solving these small specific slices of the problem. And what we're seeing from companies like Unity is they are and Epic as well, they are they are trying to build a really good full stack that contains everything that you need. And so it's a bit of a, as a game development studio, for example, and you're trying to pick pieces off the shelf and you've got a chance to build it yourself, or do you go out and buy the tech, but then is the tech sort of, does that cost work out? So there's a lot. And I think game studios today, that's a problem of today. I think that in 5-10 years, it's just going to all be part of the development stack, and they're going to offer everything the developer needs, and it's already going.
Them being Unity
or Unreal, or yes,
right. So essentially, a lot of consolidation in the tech space.
Yes,
makes sense. And how? Theoretically, this applies to both of you, but certainly Mario, because you're looking at these companies as well. How does sort of game tech's relationship to gaming relate to tech's relationship to entertainment? I'll sort of maybe clarify this a little. I talk about this idea a lot, mainly also because I'm desperately fangirl Matt Ball, but he pointed out that unlike other industries, technology in the game industry has driven expansion rather than refinement. So as tech has evolved, as game tech has evolved, the game industry has expanded because it's added new options for game engagement versus refining on existing options. So like the DVD replacing VHS didn't grow the entertainment industry necessarily. It just sort of made the process of consuming entertainment more smooth.
Right. Yeah, I totally agree with that. I think looking at skills is a good example. So they basically captured or started this competitive mobile gaming market in terms of like hyper casual games. So they basically created a new market with their technology, and that's definitely adding to the pie rather than taking a piece away. So I think a lot of these game tech companies also have the opportunity because gaming is such a universal activity, especially during this time. There's a lot of opportunity for these companies to kind of increase awareness and kind of increase gameplay, if you will. So for skills, there's a lot of people that might not necessarily be interested in playing a hyper casual game, but because they implemented this competitive nature and the ability to kind of spend real money and then redeem prizes, like that's a creative and unique aspect of that model. So I think as long as these game tech companies create something new and have a new business model, they're definitely adding to the pie than taking away.
And Spike, a perspective on how sort of WB versus the tech for WB versus tech for WB games, I guess. Is there a difference?
Actually, I think we are seeing a convergence, right? And I'm going to go back and use the Mandalorian as an example, shot in Unreal technology.
No, wasn't it shot in Unity?
No, Unreal.
Yeah, it's Unreal.
But so here you have a great example, Mandalorian shot in Unreal technology, the same game engine that ultimately the same engine, the same stack is going to be used for both, and also is the same stack and engine that's used for automotive design or is used for architecture. So I think we're seeing the whole, these tools are not just important for games, but as society starts to digitize itself, they become ubiquitous tools just for humanity in some respects.
It's game tech eating tech essentially, or entertainment tech perhaps.
Yeah, and one of the reasons I think for that is I think that the games industry is very lucky. We attract very intelligent people who are very good at what they do, and we put them in a fun and engaging and challenging place. So you've got the best of both worlds. You're attracting the best talent and you're engaging the best talent because you're making games, which it's great, is really, really fun. And I think that's one of the reasons why the games industry continues to eat the rest of the world, because we're solving problems. We just happen to be doing it through the fun lens of video games, but the problems we're solving can actually benefit all industries.
Mm-hmm. I'd like to. This is a sort of a different angle on the same question. But I've listened to a few interesting podcasts and articles recently talking about the defensibility of game companies. So, are there game companies who are as defensible as the FANG companies? And if not, what do they need to do to get there? Mario, maybe this is one for you first.
Yeah, sure.
And what part does tech have to play in that? Because obviously tech is a very big part of how kind of the FANG companies enjoy the position that they do.
Right. Yeah, I think just starting with the FANG companies, I think the defensibility seen in them is really based on two things. So one is on superior technology that you talked about, and then two is, the superior technology leads to unmatched scale. So, in terms of the video game space, if there's a game tech company that eventually commands like a number one market share within its category, similar to like Unity, for example, in terms of the game engine space, I think that certainly creates a sense of defensibility. But I think right now, there's a lot of segments within game tech, like operations, growth, market analytics. They're kind of all in the growth stages of the economic cycle. So I think competition is still pretty fierce right now. there's not a clear-cut winner in the sense that, you can see that defensibility seeing the FANG stocks today. But I think over time, there's typically one or two companies that emerge in each category that will have a defensibility. So I think in general internet sense, you see Facebook and Google kind of dominate the advertising market. You see, Priceline, Expedia dominate the online travel market, and you see like Uber and Lyft dominate rideshare. So I think having a duopoly that kind of creates that defensibility. So I think over time, that the market here in Gametech will shape into the one or two top companies of each category.
Yeah, I think there's if I may offer another way that game studios or game companies can be defensible, and that's progress, which is a little less tangible if you're not from the world of video games. But a great example is World of Warcraft. A lot of people have been playing that game for 15 years and have 15 years worth of not just memories and friendships and bonds, but also actual in-game progress, the items their character has, the way their character looks, the accolades and trophies that the character has, all builds deep, more than just habitual a bond with a game, but a really deep kind of relationship with a game that prevents you from switching or makes you think twice about switching to another game.
Mm-hmm.
Does that make
also
sense?
perhaps, yeah. It kind of also connects to social media and gaming converging, or social experiences is increasingly happening on within game platforms or worlds.
Yes.
So let's sort of look at the investment landscape. The big news recently, and we've talked about it, was Unity's IPO. There are a lot of different game companies going the IPO route recently. What are your main takeaways from their S1? And what other gaming powerhouses do you think will IPO in the next year or potentially consolidate? Mario, maybe you take this first.
Yeah, so in terms of the S1, we also just recently published our initiation of Unity. So we came out with the equal weight rating and a $97 price target. So I think for us, the main takeaway is that, gaming is still its core and it's still growing double digits. And then, like I mentioned earlier, these rising games, as Among Us and Fall Guys, they're more simpler games, more casual and more social. They're all developed using Unity. And so I think these are two very good, examples of, more indie developers being able to go mainstream during this time and even potentially after. So I think that bodes really well for Unity in terms of their gaming penetration. I think in the S1 and talking to a lot of investors, Unity's making a very big push into these new verticals outside of gaming, like architecture, automobile, film, retail. Entering these new verticals can more than double its addressable market over time. So I think that's a big reason why the stock kind of went from $52 to where it is today, around 90. And then I think from the S1, a lot of people were actually initially surprised by how large Unity's advertising business is. Like most gamers that we talk to, they know Unity for its game engine. But when you look at its financials, the game engine roughly comprises only 35% of the company's revenues. It's advertising that we estimate is actually half of their business. And so that's why, the iOS and IDFA is such a big topic for a company like Unity because of that revenue composition. So yeah, it's very interesting. I think there's, it definitely has a great foundation within gaming. And then the potential to enter these new verticals is definitely a big call option for the company. And then
Given they just launched, I don't know if you guys saw the Game Growth Fund. Do you think we're going to see Unity become a game publisher?
yeah, that's been a popular question. I think they like to compare themselves away from Epic Games, right? So they like to be agnostic in terms of who they're servicing. So I think they're trying to say, with Unreal being owned by Epic Games and Epic Games makes Fortnite, they kind of have a conflict of interest in the sense that the game engine is kind of tailored in a way to Fortnite, and so these third party developers, they might not benefit, you know to the same extent that Fortnite would benefit from each additional feature that Unreal adds to. Whilst for Unity, I don't think they have any plans really to make their own content, and I think that's an advantage that they're pitching to developers and investors, that over time, like, their tools are more universal. So theoretically, they should be able to develop like the industry standard across all types of genres, all types of games, rather than just one specific genre or one specific platform.
And Spike, this is for you. You've mentioned the metaverse a few times already today. So here comes a metaverse question. Where do you think we are in the, let's call it maybe the journey towards a metaverse? And is there a sense of consensus in the gaming VC community around the potential of the metaverse and the fact that that's where sort of the industry is heading? Or are there sort of divided opinions?
No, I think people generally get it, and the word metaverse has joined the lexicon really in the last 12 months, I think, as people start to see that a few areas, I'll give you a great example. Shopping is now done online. Dating is now done. If anyone like me is unfortunate enough to have to be dating during COVID, it's online is where to do it. Avatarization is again something that I see a lot. Being a gamer, I'm used to it, having an avatar represent me that isn't me, right? But takes the best things of my personality. If anyone looked at my Instagram account and actually met me in real life, they'd be very, very disappointed, as I'm sure with everybody. These face filters that young women are using these days on Snapchat or whatever, to augment the way that they look, not physically in the real space, but in the digital space. And so I think, again, talking about, real life learning from games, we are seeing, people using avatars to represent who they are more and more. And just incrementally, it just starts to move us further and further and further towards this sort of metaverse that someone like Neil Stephenson or William Gibson has, prophesied. And that's what I'll talk about Epic again just very briefly. And Tim, actually, I got to meet Tim a few years back at a BAFTA event in Los Angeles, and he had only read Snow Crash a year ago. He had said, right, when someone had mentioned to him, but his vision was totally there, and he's one of the most intelligent, incredible people you ever meet. But for the way Fortnite's moving away from being just a pure battle royale game to being a social space, a community space where you can watch movies or watch a concert or dip in and play some games. Everyone's just doing it, and it's just incrementally it's moving us forward to this utopia or dystopia, however you want to think of it, where we all just sort of are brains in vats being stimulated by electrodes.
I could end us here on that really positive note, but I'll maybe just ask you each a final question about the future. No biggie. Taking a financial perspective here, what trends do you think we're going to see over the next year? Is there going to be more sort of institutional, sort of traditional financial investments in gaming, like, for example, the private equity firms buying up sort of game monetization user acquisition companies or investing in them, or Goldman Sachs investing in Voodoo? Are we going to see more of those? Are we going to see consolidation within the industry? Are we going to see sort of acquisitions from outside to in the game industry? Giving you lots of options here. Feel free to ignore them all. And maybe Mario, you take it first, and then Spike.
Yeah, I think it's hard to tell whether financial companies like Barclays will continue to invest in these game companies. I think the trend is probably here to stay, if I were to guess. But I think the bigger trend is a lot of these investors that I talked about that are outside of the gaming space. So the ones that are like software investors, they're kind of creeping back into video games or creeping in for the first time. And I think the funnel of investors have widened, right? So I think that's going to be a trend that continues. I think just like a couple of days ago, Take-Two just announced that Ruffian Games, they're acquiring them. So there's a lot of M&A action right now in the space. I think typically when you look across, certain industries, M&A is usually prominent more when it's, when the industry is distressed. And I think right now, it's kind of the opposite, right? Like video games is growing, and it's growing even faster because of COVID. So I think there's a lot of opportunities, but a lot of the valuation, I would say, of gaming is pretty elevated right now. So it doesn't really, it's not a very favorable environment for M&A. But I do think with upcoming events like IDFA, for example, that's gonna kind of disrupt the advertising ecosystem within mobile. That could spur some M&A activity. So I think any of these events will be a catalyst for additional M&A.
Mm-hmm. And Spike.
I think that we're going to see. I think we're going to see a lot more investment, both from existing corporations, institutional investors. I think this wake up call, it's taken COVID for people to really get it, and I've been surprised at how slowly the non-endemic games industry has taken to get into the games and game tech. And I think that we're going to see a lot more deal flow. We're going to see a lot more deals being done. We're going to see some great deals being done, but we're also going to see some bad deals being done. We're going to see some bad stuff happening just because there's still this education curve, which I think a lot of people are further behind the curve than where they should be.
Mm-hmm. Well, both of you, thank you very much for being on the show today and for bearing with all the technical difficulties that hopefully our listeners were completely unaware of. It's been a very, very, very interesting discussion and actually really exciting to get such a financial perspective on what's become a really exciting industry. So thank you very much for being on today, and thank you to everyone as always for listening.
Thank you very much.
Thanks for having us.